Cryptocurrency, where fortunes can be made overnight. Cryptocurrency, where fortunes can be made overnight.
Hello, everyone. Good morning, good afternoon, good evening, depending on wherever it is you are connecting at this time. I'm super excited about this training. First and foremost, I would love to introduce myself. Let me see if I can pull up my video. Right? Let me see. Okay, Shish. Good. So first and foremost, I really want to introduce myself. My name is Emmanuel. I've been in the foreign exchange market space for about 2 years now. Achieved phenomenal, amazing results in the space. But not just that, not just that, it's a platform that has actually put me in the position where I've been able to leverage over it, leverage over the financial markets, leverage over the cryptocurrency markets. It's helping me make significant amount of success in the space. And I basically just opted in here to share some value as far as technical analysis and price actions is concerned, right? Now, I know there are three types of analysis in the foreign exchange market. But let me break it down this way. You want to ask yourself the question, why do we have the majority that trade Forex lose money? And why do we have the minority that trade Forex earn money? It's basically because there are different strategies that could be utilized consistently that would give you results every single day. Right? So all you need to do is just find a strategy that works for you, leverage over it, be consistent with it, be disciplined with it, have a trading plan, and guess what? As long as the strategy gives you over 70, 75, 80% every time, every day, every month, you would win. The only reason why you wouldn't win leveraging over a strategy that has over 75% accuracy is if you're not disciplined. If you're not disciplined to take your losses as losses, and you're not disciplined to take your wins as wins, that is when no matter how profitable or no matter how proficient a strategy is, that is when you would not be able to even get results from it, right? So I've not come in here to share with you that the strategy I'm going to be teaching or the training I'm going to be giving is one that would make you so successful. No, it all boils down to your discipline. It all boils down to your ability to be consistent with it. It all boils down to your ability to be able to follow through a trading plan, right? These are prerequisites towards becoming a successful trader and a profitable one at such, right? So I'm pretty excited. This information is one I've been utilizing for about 2 years now. As a matter of fact, this strategy or this training I'm going to be giving is one that I learned from one of the greatest of all time, Christopher Derrick, an amazing gentleman, a top educator with the platform I'm operating on. I mean, this man, as of 2019, I literally could recall having to follow his sections every now and then. Right? Okay, so because he's in the United States, the time difference, the time zone. So there are days I have to wake up as early as 6 a.m. There are days I have to wake up consistently as early as 7 a.m. just to be able to catch up with this amazing gentleman's training. But guess what, ladies and gentlemen, it has paid off, right? It has paid off. They were those, right? Just to be able to learn over and over and over and over and over again. And guess what? I'll give you the secret. The repetition is what creates the mastery. It's the repetition, ladies and gentlemen. Let me check for a moment. Let me see if this, yeah, good. The repetition is what creates the mastery. What do I mean? Well, when you learn something, your ability to continue to repeat the information is what will help you master the information. So he kept on teaching the same thing over and over and over and over again. And what I decided to do was to continue to repeat the learning over and over and over and over and over and over again. I also want to give special thanks to my mentor, Mr. Ken Vimo, an amazing gentleman, as well, who has helped me in this journey to becoming an independent trader in the foreign exchange market. So without further ado, ladies and gentlemen, we're going to get straight to it. Let me pull up my screen. I'm basically going to be talking about technical analysis, price action. I also mentioned earlier on that there are three types of analysis that exist in the foreign exchange market. Now, if you're a newbie, I want you to understand something. This information I'll be sharing would probably sound as Greek or like Greek to you if you're a newbie. So it's for you to commence your journey from the basics Basically, what I'll be teaching in the traditional educational system would be for the 300 level, the 400 level, and the 500 level students, right? So if you are the 100 level student, please go acquire the knowledge for 100 level. You could reach out to me. I could fit you up into one or two of my trainings. Just respond to put in a comment in the comment section. I would literally get across to you. Right? If you're a basic learner, if you're an intermediate, then this is for you. So we all know that there are three types of analysis. We have the technical analysis, we have the sentimental analysis, and we have the fundamental analysis. Right? The technicals is basically what I'm going to be teaching on today. And you say, Manuel, why do you want to work on the technicals? Well, the reason is because the technicals give more results. Yeah, there are fundamental traders out there. There are fundamental traders that trade based on news and all of that. But this is what I think, and I stand to be corrected, is what I've known over the past 2 years. If you want to consistently earn money from the foreign exchange market, be more about technical analysis and sentimental. I recall then, Christopher Derek would go into the market and would tell us he's not looking at the news. Why? Because even the news, most times, respects technical analysis. Most times. Right, so I'm pretty excited about this training. I'm super excited. I'm grateful to God for the opportunity to be able to dish out value that I've learned over a period of time that has made me who I am today. So let's get straight to it. Now, I have on the screen at the moment, I won't be working on currency pairs because, as you can see, they are stagnant. I'll literally just go to cryptocurrencies. And why would I want to do that? Well, cryptocurrencies are open 24/7. That's the amazing thing. So when currency pairs closes on Friday, 10 p.m., 11 p.m. Nigerian time or 10 p.m. Nigerian time, depending on daylight saving. When currency pairs close, I have the opportunity to go into the cryptocurrency market space to trade, to make money, even on a Saturday or on a Sunday. Now, ladies and gentlemen, everything I have here might be very strange to you. I think this is what I'm going to do. These are markup charts. These are basically markup charts. Number one thing I would love to do is let's go back to a currency pair and then do what we call backtest. You say, man, what's the meaning of backtest? Well, backtest is simply just going back to the past, trying out a strategy and to see how proficient it was, even in the past. Because at the end of the day, the market is repeating what it had done in the past. Whatever is happening in the market today was what happened in the past. What makes you a profitable trader is the ability to be able to go back to the past, take your time to understand what really happened, and then it will help you in decision making as far as the present is concerned. Right, so this is USD/JPY. I know it's not moving at the moment. I'm just going to go into the past. The first number one thing I want to start with is I do top-down analysis, but that's not a topic for today. Top-down analysis is basically looking from the higher time frame, the daily, the weekly, the monthly charts, narrowing it down to the 4 hours and then making decisions on the 1 hour. That's what I do, but that's definitely a video or a training I'll do subsequently, not at the moment. So for now, I'm talking about technical analysis. Now, the best indicator in the foreign exchange market, ladies and gentlemen, the best indicator in the foreign exchange market is the candlesticks. Not too long ago, I was on my Instagram live and I threw the question. Most people said stochastic, others said RSI. This person said this, that person said that. No, it's the candlestick. The candlesticks are the best doing that will determine the decision I'm going to take. It is what it is. And that's where sentimental analysis comes into play. Nobody's saying you shouldn't judge, you shouldn't base your decision only on sentimental, which is just looking at, which is based on what you see. No, but they promise you your winning ratio in the foreign exchange market will be over. The only thing I want to do is on the 1 hour time frame. I identify support and resistance on the 1 hour time frame. So one thing I want to do is what? Go on the 1 hour time frame. There are zones, there are areas on this chart My apologies. I think the network, had network glitch, and I'm actually, I'm in a high-rise building at the moment, very, very high. I still don't know why the network is. I don't know why the network is still doing this. But then, hopefully everyone can hear me. Yeah, hopefully everyone. Let me confirm that from my YouTube. Let me see. Not this. Sorry. Let me see. Okay, good. I believe everyone can hear me now. Awesome. So going back to the training or what was I saying? Yeah, I was talking about making my decisions based on what is happening on the 1 hour time frame, right? So there are zones, there are areas on the chart or in the foreign exchange market that are reversal areas. What a reversal area simply means is that for intermediate traders, you know what I'm saying, an area where you have the support or the resistance. The buyers bought the market to a level and then the sellers took it up from them. This is a good area. We're going to identify that with a red arrow. This is an area. You can see the green line going up, and then at this point, the red candles, which identifies the sellers, bought it down. So this is actually a resistance zone. That's a resistance zone right there, right? And then you can see the red candles coming down. There's a area here where the green candles took it up, but slightly. I really want to pinpoint areas that are so obvious. The red candles, the sellers bought it down. And then what happened at this area? The buyers took it up. This is a support zone. This is a support zone right here. I'm going to paint that as green. Right? So this is a support zone right here. Why? Because I get to see how buyers bought price up to this area, and then sellers with the representation of the red candles took it down. Right? And I can see how sellers bought the market all the way to this point. They sold it up to this point, and then the buyers took it up, decided to push it up. So this is a support zone. This is a resistance zone. Right? You could also say that to this. This is also this is a support zone right here. As you can see, red candle here, green candle took it up. This is also a support zone, right? And then this is a resistance zone as well. Based on the earlier description, this is a resistance zone here. Right. So what I do on the 1 hour time frame is to identify these zones. Let me be sure. I think I'm still on. Right. What I do is to identify these zones. I'm going to clear the chart now. I've identified them. What do I do with them now? I'm going to pull off an horizontal line. Meanwhile, if you don't know how to use Trading View, I have a video recorded on my YouTube channel, this same YouTube channel, where I practically broke down the basics, how to use Trading View as a beginner. So you could go watch that video, then how to use Trading View, and then come back to utilize this information I'm sharing right there. So I have this area as this resistance. What I'll do is I'll mark the area of the week, right? This is green. I'd love to make it purple, faded purple. Yeah. So I'll mark the area of the week, and then I'll mark the area of the body and the week as well. This is one area. I'll also do that for this area, the week, and then where the body meets. Now, ladies and gentlemen, with what I've done right now, I've been able to identify this area as a resistance, and this area as a support, right? But that's not what we are after. I've identified the areas. Yes, that's the number. That's a step in the right direction. The next thing I want to do is I want to pull out a box. So I have this rectangle tool here. I'll just go ahead and draw this right here. Boom. Good. I'll go ahead and drop this, and then duplicate the same thing on the at the support areas. As you can see this, so I have more like a zone. I have two zones right here. I have the support zone, I have the resistance zone, and I have the support zone. Now, having done this, what I do is this. I'm expecting that price, see, let's just act like all of this. Hold on, let's act like all of this. We can't see all of this. Right, good. So let's just act like this is the only thing we can see. I mark this area based on this point and then this point alongside this point. Now I'm expecting that price would either break this zone to the upside. I'm expecting that price would break this zone that I've marked to the upside, come back to retest it as it breaks the zone. It's a ceiling, it's a resistance here. It's going to break the resistance zone. Come back here to retest it as a new floor and then continue its way up. This is pure technical analysis. Or I'll be expecting that price would break this zone to the downside, would break the support, retest it as a new resistance or ceiling, and then drop. So you'd ask me, well, Emmanuel, when am I supposed to use this strategy? Use this. This strategy is best used where market is consolidating. The moment you can identify consolidation zones, the support zone and the resistance zone, trap it. It's called price trap. That's the name of the strategy. I'm not the creator. The creator is Christopher Derrick. Price trap strategy. So you're trapping price. You're trapping price between an identified resistance zone and an identified support zone. Price trap. You're trapping price such that whatever price is doing within that zone, you're not concerned. All you're concerned is about the breakout of either of those zones. Why? Because at the end of the day, ladies and gentlemen, we want to trade with the banks. Right? Whatever is making price dangle between two zones, is basically making you understand that there is no major financial activity as far as that currency pair is concerned. Right? The banks are not in that market. The moment the banks get into a currency pair, you would know why they break off these zones. Is either they break up the resistance zone or they break up the support zone. So I'm waiting for such action. I'm waiting for such activity so that I can go into the market with the banks. You don't want to trade against the banks. You don't want to trade and then start wishing and praying. Well, I would be waiting for a breakout on either of these zones, either the upper zone, which we refer to as the resistance, or the lower zone, which we refer to as the support zone. And as you can see, ladies and gentlemen, finally, what happened here? Let me show you this. Did you see how this came down to this area? What did it do? It made that retest here, and we expect it to drop. Now you could say, Emmanuel, but instead of dropping, this thing pushed up. Yes, it pushed up. How many pips? Because at the end of the day, ladies and gentlemen, the way I trade this strategies, I trade this for 30 pips. My stop loss, my risk, see, the highest risk I've used on this strategy is 30 pips. That's 3% of my capital. That's the highest risk I've used. Now I could use 3% to make 10%. I could use 3% to make 20%. I could use 3% to even make 3%, or I could use 3% to make 5%. It doesn't matter. And that's where the trading discipline comes into play. It's a trading plan. You need to understand that you're not risking more than 30 pips of your capital. No, it must not go more than 30 pips. Don't say, oh, I expect market, let me increase my stop loss so that market, that's not a good way to, that's indiscipline. That's indiscipline. So what you want to do is give it 30 pips stop loss. That's it. The moment you've been able to identify zones, if price breaks a zone and does a retest, the expected drawdown should not be more than 30 pips. If it's more than 30 pips, Get out of the market. Let the market throw you off. At least you've only reached 3% of your capital. And guess an amazing thing about this strategy, guys. If the market goes against me 30 pips, I would be waiting for it at the upper area to claim that money back. That's how sensible this strategy is. So you guys can see what happened here. Price broke this area, retested at this point. I'm going to put an eclipse there, right? I'm going to put an eclipse here. Look at this. Boom. Did you see that? So this is an eclipse right here. And that's where price retested. If you see, we had a green candle going to that area and we had a red candle that formed up. On 15 minutes, this becomes clearer. On 15 minutes, this becomes clearer. You see the retest coming good. See the retest on 15 minutes. Did you see that retest? Did you see the retest? The green candle went into the zone. There's a red candle that formed up. You would have taken this. Now, let's assume I set 30 pips stop loss, right? So let's assume you set up 30 pips at this area after you entered into the trade. Let's see, 30 pips. This is where your 30 pips will be. So this is your 30 pips stop loss. I'm just going to put in a line there, and I'm going to make it a red line to indicate your stop loss, right? Red, stop loss. So this is your stop loss here. Let me type in something, stop loss, right? So this is your stop loss right here. No caps. This is your stop loss. With the drawdown, with the drawback price, did it ever come back to your stop loss? Negative. It never did, because this is your stop loss right here. Price only did a drawback of how many pips? Of about it did a drawback of 21 pips before finally going into your direction. But let's take this back to one hour. Now this is back test. We want to see what the strategy has done in the past, right? We really want to see what this strategy has done in the past. So let's see. That's the moment. Right? We want to see what this strategy has done in the past. I'm coming just a moment. Just a moment, please. Okay, just a moment. Just give me a moment. Good. So I want to see what this strategy has done, what it did eventually in the past. It did the stop loss. After this retested, did it get to stop loss? Stop loss is 30 pips. It didn't get to stop loss. But gentlemen and ladies, understand one thing. You reach 30 pips for how many pips? Let's see. This is a short position. Yeah. You reached this 30 pips. Yeah, good. So this is 30 pips. To gain how many pips? To gain, price came down all the way to this point. This is your take profit. I'm going to mark that with a green line. This is your take profit area here. Put that as a green. So at the end of the day, what happens here? You reach 30 pips to gain how many pips? 60 pips, because this is 59.1. So you reach 30 pips to gain double. Doesn't it make sense? And guess one thing that I think this is going to be serious, but depending on your feedback, depending on the feedback I get, I'll know if I'm going to be putting up, because there's so much information about this strategy, a whole lot. So 30 pips to gain 60 pips. This is 59.1, right? As you can see, I reached $3 to make $6. But guess what? Price did not even go, or you did not get me out at the $3. I've been able to make $6. Now look at something, gentlemen and ladies. Price did another retest at this area again. It did another retest at this area, which means that I would have been able to capitalize on this again. I'm coming. I would have been able to capitalize on this one here again. And what happened? If I'm risking 30 pips again, this is still the stop loss. How many pips did price do from here? This is my stop loss at this area, 30 pips. Let's see something. Let's see something. Look at this, all the way to this point. I'm going to put a green line there as the take profit. So I risked again on the same currency pair. I risked 30 pips to make how many pips? To make 207 pips. This is how sensible this strategy is. I risked 30 pips to make 207 pips. So I risked $3 to make $20. Doesn't it make sense? On one currency pair, 2 entries. It gave me 60 pips the first time, and now it's giving me 207 pips. So one of the advantage of this strategy is the fact that it doesn't make you to go from one currency pair to the other. You could capitalize over one currency pair for weeks, for months. Because guess what? All I could continue to do is just to continue to adjust my take profits. No, to adjust my stop loss. And now I'm going into technical, right? Because at the end of the day, if this did 30 pips at this area, I could have bring my stop loss down to this area to secure the 30 pips. It moved down again, another 30 pips. I could bring my stop loss again to secure another 30 pips. That's 60 pips. It came down again, created a new structure. I would have moved my stop loss again to secure another 30 pips. At the end of the day, by the time price would go back up, I would have secured about 120 pips out of the 207 this thing did. Now this is back testing. Let me see if, okay, one person is still watching. Okay, we have so many people on YouTube already. Right? At the end of the day, I would have made money. I see people trade with so much of financial indiscipline. How do you risk $5 to make $2? Makes no sense. How do you risk $10 to make $4? Makes no sense. Why not risk $3 to make $10? That's an investor's mindset. Right? Why not risk $3, as in this case, to make $20? Right? On just one zone. You all remember the zone I marked. Okay, so this is what I'm going to do. I'm going to clear the whole chart now and then mark up another zone. So, like I said earlier, and I'll be closing up with this, I was thinking I could go into, I'll just do more of, just to show you what the strategy has done in the past. So this is another zone here. I'm going to mark up this zone from the week. Change this to light purple. Right? So the body. That's a zone. And then from this body, from the support, let me see, enlarge it to this area. So I've marked these zones already. I'm marking this based off what happened at this point, right? And what happened at this point. So let's pretend like all of this, we can't see all of this. Let's pretend like we can't see all of this. I'm just going to put in that rectangle line. Boom. Right? I've been doing this for 2 years, this same strategy. I use it to trade cryptos. I use it to trade binary options. I use it to trade volatility. It's for any trading instrument out there, as long as you can identify support and resistance zone, boom, that's all you need. So remember, we're identifying these zones. And you know what we say? We're expecting price to show us where it's going, for the banks to actually show us where they are taking this thing to. See that it breaks the up zone, comes to retest and pull up, or it breaks the down zone here, retest it, and then pull down. Breaks this zone, retest it, and then pull down. Right? Now, like I said, we are acting like we cannot see anything that has happened in the future yet. We're just identifying this based on what is here. And ladies and gentlemen, understand something. We move on. Did you see that? You see this move here? Only the banks can make this kind of move. Only the banks can make this kind of move. And that is when you trade with the banks. So the reason why we are doing the price type strategy is because we want to trade with the banks. Because at the end of the day, they are the ones who put in high liquidity into the market. So you see what happened? The banks decided to sell USD JPY, and that was what came about this long move to the downside. So you can see this long move to the downside. And what happened? There was no immediate retest as in the previous case. The price broke this zone, long move, came back to retest it at this area before it finally dropped. That's patience. Did you see that? Do you see that? Price broke at this point, only came back to the zone at this area and then dropped. So you say, well, am I supposed to wait for? Of course, you're supposed to wait for it. That's a trading plan. That's the discipline. That's the patience. You say, am I supposed to sit on my laptop? I don't sit on my laptop to wait for this state. I have TradingView on my smartphone. So as long as my smartphone is with me, the same way I check WhatsApp messages, the same way I check Instagram messages, it's the same way I'll check to see if price has come back to do retest. If it has come back to do retest on my MetaTrader 4 or MetaTrader 5 account, boom, I get into the trade. That's it. So this is the area I did the retest. It did that retest here. As you can see, it was a very, very quick one, but it did that retest here. Let me see what it did on 15 minutes. It did the retest over there. Yeah. It did the retest, not really in the zone, but this is also a retest. I would have entered it at this red candle. Right? So let me put in the area I would have entered this state. The close of that red candle, I'm going to make that yellow. So that's my entry point. I'll take this back to 1 hour. And then let's see what happens. So if you are taking that trade and you risk, you know the number of pips, we say you risk only 30 pips, right? You're only risking 3% of your capital. So let's assume I took this trade right here and I decided to risk 30%. I decided to risk 3% of my capital. Let's calculate 3%. We have short position. So this is, I took the trade on this yellow line. 30 pips is 30.0. So this is 30 pips. How many pips did I use this to make? Let's go and put in a line at the take profit before it reversed. Okay, price came all the way to this one. I'm going to paint that as a green and then put in a line here as a stop loss. Paint that, make that a red. Good. So we have that this is our stop loss with the red line. This is our take profit. Now let's draw this to the take profit to see how many pips price did. Again, I risked 30 pips to make 136 pips. So I literally risked 3% of my capital to make what? To make 13% of the capital. Did price ever come to the stop loss? No. But that was a zero drawdown. It never came anywhere close to the stop loss. But what did he do? It came all the way down. Ladies and gentlemen, this thing works on every trading instrument, stocks, cryptocurrencies, volatilities, whatever it is. Whatever it is, it's the same thing I used to trade cryptos, BTC USD. Go show you the chart on BTC USD. Right? Let me show you something here. So if you look at this right here, this is an area, this is an area. I expected that it's either BTC breaks this zone, retest. It did a little retest and pull down here. But guess what? It came back to that zone. Did it do any retest? No. It pulled up, did a retest at this zone. So if we are saying 30 pips, let's say this is a long position. If we're saying 30 pips and we put in, you know the way we calculate pips on BTC. You don't use 30 pips on BTC because it's the pips calculation on BTC is different from that of currency pairs. What I'm saying is, look at this move. How much would you have risked to make this capital? You'd have risked how many percent? 2.28% to make 6.98%. If it's the 3% of 3% you would have risked 3% here. Let me see. Yeah, you'd have risked 3% here to make how many? 6.98%. This thing works. Did you see that move to the upside? This is cryptocurrency. Right? I have a cryptocurrency chart that I've been utilizing since, only God knows. This is TradingView. Okay, I'm going to show you now. I've been utilizing for over 2 years now. That's on Bitstamp. You'd see it. And I'm going to see, I'm going to narrow this down. Let me take this video. This is it. Gentlemen and ladies, I've done, you see all these markup charts? They've been there for over a year ago on BTC. You see the way it is? Over a year ago. I've been trading cryptos for over a year, and you can see this. I don't joke with this. No matter what, if you identify 2 zones today, in the future, price will respect them. It's the truth. Look at this. Look at this. Look at all the zones. Look at all the zones. Hey, I think I just tampered with some Ctrl Z. Over a year, I've marked up this chart. Until date, whenever BTC gets to any of these zones, if you test it and leave side. No, I'm not leaving side. It might be too complicated for you to see, but look at this. Right, this is a zone. Price was reacting at this zone. This is also another zone here. Let's see. Did you see how price kept on respecting this zone? Yeah. It did the same thing here. It did the same thing here until it finally pulled up. Right? See, it broke this zone. Look at this. Over a year, I've had this chart on over a year. It broke this zone to the upside. Did the retest? Did you see the way it pulled up? Let me see if I can bring that low. Did you see the way it pulled up? Yeah. Where was the retest on this? So even if I just marked this last year and price gets to the zone, I would identify this is a retest here. Did you see that? Let's try the stop loss, the risk to reward. 30 pips, 3%. This is 3%. 2.99%. Let's leave it at that. How many pips did it go? How many? 12.67%. It didn't stop there. The price never came back to that entry. Even at this point, this is not the entry. But guess what it did? It kept on moving up. BTC kept on moving. So you would have reached 3% of your capital to make how many? 16%. Look at something again. Let me take this off. This is also another zone. It did a retest here. Did you see that? How many pips? Let's try that again. Yeah. 30 pips. 2.96, let's leave it at that. Put up how many? Okay, put up to this point. You have reached 3% to make 9%. Right? And this goes over and over and over and over and over and over. You see how BTC keeps respecting those zones? Look at these zones here. Over a year, I've not marked any chart. I've not marked any zone on this. Did you see? Now look at what price is doing. Look at what BTC is doing. Look at these 2 zones. Can you see these 2 zones? Right? Is BTC not dancing between them? Now I expect that if BTC would break this zone, if it will break this zone, I expect that it comes back to retest it, and guess what happens? It continues on its way up. It works like magic. It's not magic. Right? Let's leave cryptos. Let's go to volatility. Okay, I have a volatility chart here. Volatility index. Let's go to volatility index and see what price did, what it has been doing. This is this is volatility 10. I'm going to take it back to. I think I marked this zone day before yesterday. I marked the day before yesterday. Gentlemen and ladies, can you see this? I marked this zone based on what was happening here. Yeah, and what was happening here. Yeah, whatever happened at this point never happened. It did not happen as at then. But do you see what happened? Oh my goodness, I marked this zone yesterday night. What did I see? This morning, early this morning, and price has retested and is pulling down. Kai. So this is it. Price broke this way. Price broke at this side, right? Broke at this side, did a retest here. Did you see how it's pulled up? 3%. 3% too. Boom. Yes, 3%. And we don't even want to use 3% on volatility. There's a way you calculate this. But the stop loss, let's leave it at 30. This is the stop loss, 30. But target was what? What did it go to? So you reach 3% to gain how many? To gain 9%. Would you say you have made money? Hello? Would you say you have made money? A simple break and retest. Right? And then I marked this one just this morning at about, I think it was 4 a.m. this morning. That was about 4 a.m. this morning, Nigerian time. I marked this zone based on what was happening here, one, and what happened here. Gentlemen and ladies, you see how price reacted? Let me show you. Price broke this zone, came back to do the retest. What is happening now? Price is dropping. Now, let's say you risk how many percent? 3% short. So let's bring this stop to, let's say you risk 3%, stop loss at 30. This one is also, at least this trade would have given you back your money. Because at the moment, price is at 34%. You risk 30%, you reach, not 34, you risk 30 pips, which is 3%. And by now, you're what? You've hit 3% profit. Let me take you to R75. This one blew my mind completely. I think I just hope I've not cleared the chart. Yes, I've not cleared it. This one blew my mind completely. Marked up this chart last week, no, this week actually. Did you see that? Break and retest. He did the retest here. Boom, pull down. Came back up again to retest this zone. Pull down. Now, you see what it's doing now? I'm expecting that it has come into this zone. I expect it to what? To break this zone upside, do a retest there, and continue its way up. This brings us to the end of this training. If you got value, just go ahead and type in value on the chat. If you need more in-depth training on this, I'm connected to a platform that educates, teaches about the strategy much more than I do. Right? I'm just the messenger. I'm not the message. I'm communicating. See, I will give you access to the source. I am not the source. I am just the channel. I will give you access to the source. I did not study anything relating to foreign exchange in school. My background is in surveying and geoinformatics. But here I am today. What I know in Forex, I tell you, is more than what I even know in surveying. And it's not because I've been here for 5 years. I've been here for just 2 years, 6 months. Why? Because I had access to a platform that provides only the relevant information as far as the foreign exchange market and crypto space is concerned. You all don't want to. You don't want to keep on going around YouTube to download videos to feed yourself with so much knowledge. You only need the specifics to make consistent earnings from the foreign exchange market. So I super celebrate each and every one of you. If you got value, just go on the comment box, put in value. You could also reach out to me. You could reach out to me. I don't know why this thing is not, doesn't allow comments. Okay, you could reach out. Okay, so basically you could reach out to me on my IG at Emmanuel is great. You could reach out to me on my IG at Emmanuel is great for more information. I'm super excited. I'm pretty excited. I want to appreciate each and every one of you for connecting. My internet went off on the system, but I'm here on the smartphone, right? I look forward to seeing each and every one of you win consistently in the financial and crypto market space, right? See you all soon. Take care.